My guest today is Fred Thiel. Fred is the CEO at Marathon Digital Holdings. Marathon Digital Holdings, of course, one of the largest, most energy efficient, and most technologically advanced Bitcoin mining companies on the face of the planet. Welcome to the show, Fred.
Thank you. Great to be here.
Great to have you here, Fred. Look, let's do what we do at the beginning of the show. It'd be great if you could please introduce yourself. I'd love to just hear a little bit about your professional story and what you've been doing that has led you to becoming CEO at Marathon.
Sure. So I'm the chairman and CEO at Marathon Digital Holdings. I've been in the technology industry for 40 years. And first kind of job in technology was writing software for a bank in the city of London back in the late 70s, back in the days when we used punch cards to program computers, and when the ledgers they used in banks were actually handwritten when you went into a teller to cash a check. I've worked pretty much in every aspect of technology, large mainframes, super minis, PCs. I was very involved in the transition and building out of the internet and the datacomms industry. A lot of experience in the semiconductor industry with data networking chips, Ethernet technology. And then also as kind of the internet spread, Internet of Things and connecting devices to the internet. I took a company called by the name of Lantronix public in the year 2000. And then was very involved in the ad tech industry as well. Ran a company called local.com, which is a publicly traded ad tech company. Very involved in the search industry. And basically have covered kind of enterprise software, every aspect of the industry. Did a bit of a right turn into the dark side of the capital side of the industry, and managed a fund for a private equity firm investing in enterprise software companies, and also co-founded a venture firm investing in B2B SaaS companies. I got involved in crypto back in the mid-teens, 2015. I saw there was a need to build a trading platform that would allow you to essentially aggregate order books from different exchanges around the world and be able to trade out of one account with one bank account. A lot of people had challenges moving money from exchange to exchange, and it was hard to get liquidity into exchanges. And so I felt that a killer app would be kind of a centralized order book. Talked with regulators in the US, and they said, have no idea how you would ever get something like this licensed. Plus, you'd need money transmitter licenses for 50 states, et cetera, et cetera. Very big kind of enterprise. And then went to Switzerland, where they had started becoming very open to crypto in Zug, the crypto valley, and approached FINMA, the financial authority in Switzerland. And they said, yeah, you could most probably build something like that here. The challenge is you're mostly going to need to be a bank, so you're going to have a banking license, and we don't give banking licenses to American companies, and you would need about 120 million Swiss francs of share capital just to be able to do it. Then went to Liechtenstein, which interestingly is an EU country, and Liechtenstein said, yeah, well, we don't have any exchanges in this country, and we don't have any laws about crypto, so maybe we should write a law about crypto. And so together with a law firm, we helped them write their first crypto law, which essentially treated Bitcoin and Ethereum as currencies from an exchange perspective. You just had to have a Forex license to trade them. And so we went about getting a Forex license and started trading Bitcoin. Not too much later, the Liechtensteinian authority said, yeah, you really need to be a bank to do this. And you need a banking license. So we transitioned the asset to a local group there in Liechtenstein. And about the same time, I had been approached to join the board of Marathon. At the time, it was Marathon Patent Group. And a good friend of mine had been asked to become CEO and transition the company from a patent troll into a Bitcoin miner. And so this was about late 2017, early 2018. Joined the board officially in early 2018, and then we had to basically right-size the balance sheet, do a number of things. The company had a market cap of less than $4 million at the time, and had a lot of debt. So we had to get that fixed, and started raising some money in early 2020. and raised $6 million, then $100 million, then $200 million, all in quick succession, as kind of all the interest was coming into this space, and placed the single largest order with Bitmain, the primary hardware vendor in this space, that they had ever received. And then in 2021, started deploying those miners, and then went out and raised even more money, and went and placed yet another larger order, nearly $800 million at the time, with Bitmain, for even more miners. And here we are now, a few years later, and we're kind of the largest in the world at what we do of the publicly traded miners. I became CEO in 2021 when my predecessor, for health reasons, decided it was time for him to step down. And so the board decided that I was the best candidate. So made me an offer that I couldn't refuse. And I've historically scaled businesses. It's what I do. And it's been great to be able to build a wonderful management team. I was employee number 5, and today we have just shy of about 50 employees, and operations in the US and also the UAE.
Wow, that's quite a story, quite a journey, Fred. So as you've identified, then Marathon is effectively now, one of, if not the largest Bitcoin mining companies in the world, certainly in North America. I know you're probably one of the largest holders of Bitcoin among publicly traded companies in North America as well. Look, we'll talk about that. Maybe I'd just be interested in your reflections on this then, Fred, in terms of how you and Marathon think about this. Why is it that you want to be such a large Bitcoin miner? Where does that, I suppose, obviously you must have a strong conviction in the future of Bitcoin as a tradable asset, perhaps as an institutional asset, perhaps as has some kind of role to play in the future of finance, the future of money. I know these are kind of big philosophical questions, but just maybe put us into context as to how you've got to. It's happened quite quickly through those large purchases of mining equipment, I suppose. Where do we think we're at the moment?
Well, I think Bitcoin, and I've always believed that Bitcoin, having a finite supply, makes it the best type of asset, in that if it becomes popular and people adopt it, then its value can only increase. One of the challenges with gold is that it's very hard to transport. It's not really fungible. You can't saw up gold ingots very easily and split them up. And they keep producing it. And in reality, the gold market can fluctuate simply by the producers mining more of it and producing more of it. And so Bitcoin has this unique nature in that the block subsidies, which is the money that essentially goes to miners that generates new Bitcoin, if you would, that come into the marketplace. It's a finite number of coins per day, because it's a finite number of coins per block, and there are a finite number of blocks per day. And every 4 years, that number decreases by 50%. And eventually we'll hit 21 million Bitcoin mined. Currently, we're a little over 19.4 million Bitcoin that have been mined. And so it's a zero-sum game every day. There are only 900 Bitcoin today that can be mined, and all the miners around the world are vying for those 900 Bitcoin. So unlike gold, miners can't sit on reserves and then exploit their reserves and pump a lot of gold into the marketplace. With Bitcoin, if you're not mining, you're missing out on your share of that 900 Bitcoin per day. You can't sit on reserves of unmined Bitcoin. And so it's very much a game of efficiency and operational excellence. And it's a game of scale. You have to have enough scale so that your cost to produce Bitcoin is low enough so that you can operate profitably in a very competitive marketplace. The other thing that I really think is interesting about Bitcoin is the impact that Bitcoin mining has on the electrical grid. And by that, I mean the positive impact that it has. The electrical grid, by its nature, is not a battery. It's just plumbing. And so the grid utility operators are constantly striving to balance generation capacity with the amount of energy being used or the load. And it's not a constant number, and it's not a flat number. It varies fairly dramatically during the course of the day and night. So in the morning, typically, people wake up, they turn on their stoves, they cook breakfast, they maybe do a load of laundry, they turn on the heat. So the energy demand starts peaking about 9 a.m. in the morning, and then people go off to work and they drop their kids off at school and they shut off the heat, they shut off the air conditioning, they're not cooking, and electrical demand drops. And then it stays low until about 3 o'clock in the afternoon when it starts peaking again. And about between 3 and 9, it sort of really peaks out. And this is something called the duck curve, because it looks like the underside of a duck. It kind of the tail and then the belly and then the neck and the nib. This is very difficult because it's not the same amount of electricity at the same time of day. The grid operators are constantly looking at this to balance it. And so they need to be able to call generators and tell them, hey, turn down the amount of electricity you're supplying, turn it up. That's very hard to do with nuclear power plants. It's very hard to do with coal-fired plants, which operate at the bottom of the energy pyramid, if you would. Easier to do with gas plants, special types of gas plants called peaker plants. But it's extremely easy to do with Bitcoin, meaning though Bitcoin doesn't generate electricity, it consumes electricity. And a utility can signal to a Bitcoin miner, hey, I need 1 megawatt of power. Can you shut down 1 megawatt of power? And we can do it in 5 minutes. And then when they don't need that power anymore, we can turn right back on. And so we act as this perfect load balancer for the grid. And both in our operations in Texas and North Dakota and Nebraska, as well as in the UAE, we have very close relationships with the grid operators and the utilities, and they love what we do because we make their lives much easier because they don't have to predict load so much and generation. They can really just signal to us, hey, need more, need less, need more, need less, and we can cooperate with them and provide that. So we provide this great utility to the grid. The other thing Bitcoin mining can do is it can use stranded energy. And by that, I mean, if you want to have an effective transition to renewable energy, you need to create an incentive for renewable companies so that they can sell their energy, their electricity. The problem with renewable companies, especially solar, is the time of day that solar operations work. They generate electricity from 9 in the morning to 3 p.m., which happens to be the time of lowest demand on the grid. And so it's very hard for solar operators to earn a good profit, excluding the incentives they get from governments for operating their solar farms, because putting battery systems to absorb all that energy so they can then sell it at night when peak demand happens is extremely expensive. And at utility scale, battery systems don't really work other than giving you an hour or two of extra capacity. So we act as this customer of last resort. We can locate our miners adjacent or behind the meter, as it's called, at a solar farm. We can soak up all that energy during the day when the sun is shining, when they can't necessarily sell that energy to the grid profitably. And then when they can earn a better profit selling to the grid than selling to us, then they can do that. And so same thing applies to wind farms. When the wind doesn't blow, we can use grid energy, but when the wind does blow, we can use that excess energy and provide them with financial feasibility for their projects. So we incentivize more renewable energy, we balance the grid, and we secure the Bitcoin network. That's what miners do. We really secure it. And that means that it's safer for everybody out there to hold and use Bitcoin because it's harder for people to try and do things to the Bitcoin network when more and more companies are mining.
Yes, absolutely. Very well said, Fred. And look, it's interesting, right? Because, Bitcoin's proof of work consensus mechanism, which requires energy intensive mining. This is what you do. There has been a narrative, of course, that the Bitcoin's proof of work mining is a net negative for the planet because historically there have been, let's say just a dirty energy or coal powered miners, thinking particularly in China, but also in other parts of the world, which is an attack vector for Bitcoin from, ECG minded people, companies, and politicians. Look, you're very aware of this, Fred. I guess I'd love to get a sense of, I'm sure you've noticed that narrative has perhaps just started to change as people get educated in Bitcoin's role to play in helping drive new renewable energy sources, as you've talked about. So I guess just love to get your perspectives on where we're at and that, I suppose, transition to cleaner Bitcoin mining. Do you have a sense of, what rough percentage of the network is perhaps renewable based at the moment, and what is the trend looking like, and what do you think are the narratives around that, I suppose, in the corridors of power?
So if you go back 2 or 3 years when the majority of Bitcoin mining in the world was done in China, the amount of renewable energy used for Bitcoin mining was somewhere in the 30% range. So 30% of Bitcoin was mined using renewable energy. The bulk of Bitcoin was in those days mined using coal and or some other form of gas-fired fossil fuel plant. Today, over 50% of the energy used in Bitcoin mining is renewable. And by renewable, I don't mean fossil fuel offset by carbon credits. I mean, it's actually sourced as renewable energy, nuclear, hydroelectricity, solar, or wind energy, with some small amount of geothermal, but a growing amount of geothermal. Marathon is 58% renewable today. We site our miners typically behind the meter at wind farms or solar farms. And when we do draw from the grid, then we offset with what are called renewable energy credits, which we source by paying somebody who's generating renewable energy for those credits, and then we can use those to offset our carbon that we use. A number of reports have recently come out by KPMG, which is a large, one of the big four accounting firms, as well as even Cambridge has revised their study that really, blackballed Bitcoin mining, and they took down the amount of energy consumption that Bitcoin miners use by over 20% and said, yeah, we had our numbers wrong and we had our sources wrong. And, the great thing with Bitcoin mining is you can see very easily using certain tools exactly where the Bitcoin is being mined and what machines are being used, so you can calculate the actual energy load. And Cambridge has now gone back and revised that. David Bratton has also done a lot of work in that area. And, government officials are now seeing the benefits, especially in Texas, of how Bitcoin mining is able to shed load quickly, to save consumers from having brownouts or load shedding events in the grid. And what it also does is it saves them money, because by being able to provide profitable revenue streams to the renewable energy companies, those renewable energy companies don't have to charge very high prices to consumers when they can sell the energy to the grid. And so it actually ends up netting out to a lower cost for consumers overall, because Bitcoin miners are operating on the grid. So you're starting to see now more and more reports being published, more and more studies by academia showing that, in reality, Bitcoin mining does actually help the grid. It helps balance it. And it also has a greater benefit in that it really foments the distribution and use of renewable energy.
Yeah, and look, just to sidetrack for a moment, Fred, there's been some commentary in the terms of perhaps this narrative shift. The report that you mentioned from KPMG and I think the Cambridge that you mentioned as well, it happened reasonably soon after, of course, BlackRock famously filed for a physical spot Bitcoin ETF. And now, of course, we're seeing this narrative towards very much a likelihood that not only BlackRock's application, but also similar spot ETF applications from Fidelity and so on and so on. Very good chance that these will all be approved perhaps at the same time, just because it perhaps wouldn't make sense just to give one of these companies an ETF and none of the others. So Yeah, I suppose, what am I saying? I'm saying, yeah, I'd just love to get your perspective on, yeah, what you think is happening there, and how likely those approvals are to happen. And then, look, I'm sure we'll talk about the halving and Marathon's position as a holder of a Bitcoin treasury as well. But let's do the ETFs first. What's going on there, do you think?
So I think, I don't think the timing of the KPMG report and Cambridge's updates have any correlation to BlackRock's application. I think BlackRock has, very good relationships within the financial community. They have great relationships within the SEC, obviously, because they have 500 or more ETFs that they've successfully registered with the SEC. I think what's happened is Fidelity, Vanguard, and Fidelity has been involved in the crypto space for quite a long time. They were a miner themselves very early on, as early as 2014, I think. What they're seeing is their institutional clients are saying, listen, we want to be able to invest in Bitcoin. We don't want to hold spot Bitcoin. We need you to create financial instruments that we can use that fit within the rules and regulations that we as institutions have to operate within. And we need to be sure that the Bitcoin that we hold is properly custodied, et cetera. And so when BlackRock's not going to create an ETF to hold spot Bitcoin unless there was enough demand, and there obviously have been many applicants. I agree with you that the SEC can't approve one and not approve others necessarily. They've already approved ETFs around futures, and as the recent SEC versus Grayscale case proved, the judges felt that the three judges on the panel felt that the SEC was capricious and overreaching, and had not used proper thinking, if you would, in formulating the reasons for the refusal for the Grayscale trust to convert to an ETF. That doesn't imply that it will be approved as an ETF. It simply means that they have set a standard that the SEC has to meet for how they refuse them. The biggest hurdle for the SEC is the fact that they have approved futures ETFs. And they're in a position where they can choose to appeal the ruling, which I don't think they're going to do, because that would require it to go to the Supreme Court. And I don't think the Supreme Court is particularly open to dealing with the case, and B, I think they would likely hand down a decision the SEC would not like. The other thing is, I think that the SEC is in a position where if they want to register a win in the ledger, it may be easier for them to approve a handful of spot ETFs and sort of claim, yes, we've corralled crypto. We now have a safe way for Bitcoin to be able to be held by consumers without having to do it on exchanges. And we think it's time to allow this to happen. Realize that another shift in narrative is also the shift and the separation of Bitcoin from crypto. Right? Crypto today is when you talk about crypto with folks, it's altcoins, it's DeFi, it's all of those products, but Bitcoin is Bitcoin. It's something else. And you can argue about Ethereum. Is it a commodity? Is it a security? Is it overly centralized, et cetera? But Bitcoin is really generating a narrative today that separates it from broader crypto. And so I think what you're going to see is these ETFs will eventually be approved. Were the SEC to really want to refuse these more longer term, I think they would have to essentially backtrack on the futures ETFs for Bitcoin and say, listen, this was a mistake. We shouldn't have done this. Let's unwind it. I don't think they're going to do that. This is regulators are led by political animals. The person who heads the SEC, Gary Gensler, is a political animal. He is likely focused on what's next after being chair of the SEC. I think he's interested potentially in Secretary of Treasury, which would mean that he would need the Democrats to win. And if you look at what the Republicans are really, all of the candidates other than Donald Trump, they are all very pro-Bitcoin. And if you look at members of the general public and even members of the US Congress under the age of 45, they tend to be pro-Bitcoin. They may be anti-crypto, but they're pro-Bitcoin. Members of Congress over the age of 65 and voters over 65 really don't care. And there have been some recent podcasts by some of your colleagues that have reported that really the orchestration of the Biden administration's kind of war on crypto was predominantly spearheaded by Elizabeth Warren and her minions within the White House. So, I think it's going to be very interesting to see the outcome of this election in 2024. I think it's the presidential election, which also brings with it a number of elections for various Senate seats. And it's going to be interesting to see how things shake out. I think it'll be full of surprises in many ways, not least of all the Donald Trump side of this. But I think that what we're really getting to today is sometime next year. It may happen sooner, but I think most likely next year, you will see the Bitcoin ETFs be approved. And I think that will have a major impact on the market because institutional investors will come in. When they come in, that then generates a demand for Bitcoin. There is very little liquidity in the marketplace today. If you look at the Bitcoin that's available on exchanges, there's very little of it available. And it's basically held mostly in whales wallets, though the number of wallets with 10 Bitcoin or less in them is growing consistently, and wallets with less than 1 Bitcoin in them are growing also consistently. So adoption continues apace. And if you put a few $1 billion of demand into the market, it's going to cause the price of Bitcoin to go up. And I think one of the reasons why you continue to see whales accumulating Bitcoin is because the anticipation of this institutional wave. When it happens, it will be kind of a step function change in the price of Bitcoin, and that will generate a lot of demand.
Yeah, fantastic thoughts, Fred. Look, a lot to dig into there. But yeah, just I guess observations from me. You're right. There's not a lot of I guess liquidity happening in the market at the moment. Maybe not a lot of Bitcoin on exchanges for sale. And yet, as you identify, I've seen the stats from Glassnode and all those on-chain analysts. You're right. The smaller fry, if you like, are continuing to presumably dollar cost average their way into their own little stack of Satoshis every week. I do it myself. So there's a lot of people doing that. The whales perhaps accumulating as well. And yet the price itself is doing absolutely nothing, despite the fact that we are now, I don't know how many months, 7 or 8 months, whatever it is, away from the next Bitcoin halving. And if the SEC do delay those ETF applications to the last date, which they could well do, that's 2 months before the halving. So potentially very positive price catalysts in the future. And yet, as we say, not much happening in the market at the moment. How do you think about, your role as a big miner? You're one of the biggest holders of Bitcoin. At the same time, while you have all these Bitcoins in your treasury, I think around give or take 13,000 Bitcoin, you can say if that's roughly right or not, but you're still selling Bitcoin as well, presumably because you have operating costs to pay down. So you need to do that. But in the back of your mind also, Fred, the idea that there is a halving, so there'll be exactly 50% less Bitcoin available to you to mine every day and every week. And if the price doesn't go up, that is going to affect you as well. How do you sleep at night with all this kind of running around your head?
Well, being a Bitcoin miner requires that one has, let's just say, you have to have a lot of steel in your will, meaning not your testament, but your conviction about Bitcoin, because we don't control the price of Bitcoin. We don't control the global hash rate, which has doubled in the last 12 months, which affects the difficulty rate. The only thing we do control is our cost of electricity and the amount of miners that we invest and how we manage our balance sheet. And so if you were to look at our balance sheet today, you'd see, yes, we hold approximately 13,000 Bitcoin on the balance sheet. We hold typically around $100 million of cash. And then, we have no debt other than our convertible bond, which isn't due until 2026. And that has today very attractive interest rate of 1% on it. And so debt service on that is, not necessarily a big expense for us. So we are in a position where we're very prepared for whatever happens come April of next year when the halving occurs. If the price of Bitcoin doesn't go up, we have reserves and the ability to weather a period of extended drought, if you would, until price does go up. You can argue, well, if it follows the traditional halving cycles, the price of Bitcoin should go up 6 months after the halving, it should peak. And yes, that's if you believe that Bitcoin trades based on halving cycles alone. I think it's a much more complicated animal than that. I personally believe that Bitcoin trades much more related to liquidity cycles and how much liquidity is available because it is a risk asset. But when you look at it, in this year, for example, Bitcoin is up, 70, 80% year to date. And yet, liquidity hasn't increased dramatically in the marketplace. So the nature and the correlation of Bitcoin to things like equities, to things like gold, to things like inflation, the US dollar is changing. But I think as the US dollar begins to weaken, which it will, because of two things. One is more and more countries going off the dollar as a currency for trade and as a reserve currency. You look at amongst the BRICS countries and others, the vast majority of them have been pumping their reserves into gold as opposed to the US dollar, which was their traditional holding. China has dramatically sold off a considerable amount of their US bond holdings. A number of other countries have started doing the same, and they're now starting to hold more and more gold. And yet the price of gold hasn't gone up dramatically either. And so I think what we're seeing is capital is being scarcely allocated around. People are being opportunistic, especially in regards to the price of Bitcoin, and buying kind of it anytime it gets in the 23 to 25 range. You see people come in and buy, and then demand tends to sputter out as it gets near 30. Because people are waiting for a big catalyst, to your point. Will the halving be a catalyst? Going from 900 Bitcoin produced a day to 450 Bitcoin a day, I don't think that shortage of supply in the market is going to have any real significant impact. When you think about it today, about 50% of the Bitcoin produced is sold into the market, if not more, on a monthly basis. And if miners were to sell everything or sell nothing, I don't think it would have a lot of impact on the market other than an emotional reaction from the marketplace. People thinking, oh, miners are hodling again. That means the price of Bitcoin is going to go up. We personally, as a miner, like to hold our excess Bitcoin in Bitcoin as opposed to converting them to cash. So while many of our peers sell every Bitcoin they make, we've reached a scale whereby we produce more than enough Bitcoin to cover our operating expenses. So we're not having to sell shares of stock in the company or add more debt to cover our electrical bills and our operating expenses. We can produce Bitcoin, sell Bitcoin, and still have money left over to add to the balance sheet in the form of Bitcoin. Again, when the halving comes along, I think a couple of things are going to happen. If Bitcoin hasn't moved up in price, then the difficulty rate will crash because there will be many miners who can't afford to mine. And so global hash rate will drop, which makes it much easier for those of us who remain. Efficiency, energy efficiency becomes a critical factor. We have amongst the most energy efficient fleets of miners today. Across our fleet, the average efficiency is 25 joules per terahash for the whole, joules per terahash for our fleet, whereas the average for the industry is in the mid 30s. And so by being in the lower end, we believe that, if we have to mine at a loss, we can mine at a loss, but it won't be a significant loss, most likely. And we have enough reserves to carry us until such a time as the price of Bitcoin either goes up or the difficulty rate drops so significantly that we're back in the black. So I think, that's kind of how one has to look at the halving. If you believe historical patterns, in theory, the price of Bitcoin should begin to go up kind of within 6 months post the halving. If you're a chartist and you believe in Elliott wave patterns and Fibonacci and other things like that, then some people would say that there's likely a dip in Bitcoin and then there's a huge run up that follows. I don't have a crystal ball that has enough accuracy that I'm willing to publicly place bets, but we as a company have different strategies for different environments, and we pride ourselves on being very good capital allocators and being very agile. And so if the market continues this choppy kind of sideways view into the halving, we have one strategy. If the price of Bitcoin goes through the roof, we have another strategy, and then there's some strategies in between. So.
Just in summary, be prepared for all eventualities. No such thing as a crystal ball. I like it. Thank you, Fred. Thank you. All right. Well, just as we finish up this part of the podcast, just before we go to the break, look for anyone interested in learning more about what you do. Tell people where they can go to learn all about Marathon, because you have a great website and there's all sorts of analytics and information about your different mining sites and the different energy mining mixes of those. So if people want to know more, what should they do?
They can go to mara.com, MARA.com. You'll find all the information you mentioned there. You can also follow us on Twitter at MarathonDH for Digital Holdings. Or you can follow me at FGTHIEL on Twitter as well.
Awesome. Let's go to a very quick break and then we'll come back. We'll have some fun. We'll run Fred through the very famous crypto conversation hot take round back in 1 second. And we are back. And I'm with Fred Thiel. Fred, of course, is the CEO of Marathon Digital Holdings, one of the biggest Bitcoin mining companies in the world, and holding around 13,000 Bitcoin. Fred, I like to finish each podcast with a quick round of rapid-fire crypto conversation hot takes. Are you up for it?
Yep, absolutely.
Just going to run some questions at you, Fred. No right or wrong way to do it. Just want your kind of honest answers, hot take style. Question one for you, Fred. Where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
I am a big believer in Bitcoin as the best layer one network, and I think there are going to be all sorts of very interesting applications built on top of Bitcoin. I'm not a maximalist in the sense that I don't think Bitcoin should change and evolve with the times, but I'm also not a multi-chain, multi-crypto enthusiast either. So I think you need to put me kind of in the 3/4 of the way towards maximalist camp.
Very well said. Okay. What would you say then is your firmest conviction crypto opinion, Fred?
That Bitcoin is the best digital asset or best investment asset out there, bar none. If you look at it over its lifetime, if you look at it over any period that is greater than kind of 18 months, it has performed better than any other asset out there.
Absolutely true. And amazing that people can't understand that and refuse to look at that in a rational way, because it's true. Fred, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So, it's a long time, but think, 10 years time, I suppose the Bitcoin mining industry globally, what would you expect it to look like, do we think?
Well, within 10 years' time, we'll have gone through 2.5 halvings, if you would. And the amount of Bitcoin produced per block from a block subsidy perspective will be quite low. It'll be under 2 Bitcoin per block. And so the expectation is more adoption will have occurred. Therefore, transaction fees will be a greater portion of the block reward than the subsidy is. And I also expect the price of Bitcoin to have increased significantly, more than enough to make up for the difference in the decrease in block subsidies. We are at it's kind of 10% adoption today, and we're hitting the inflection curve as soon as institutional adoption happens. And at that point, I think you'll see significant adoption. And the benefit of that rapid adoption that you get when the institutions come in is that there are a finite number of Bitcoin available, and most of the Bitcoin are held by very strong hands, meaning people who don't want to sell in current market conditions, which means that you're going to see a lot of price action.
All right. Well, exciting words. We'll see. Just gotta wait 10 years, I guess. Flip side of this course, Fred, sci-fi author William Gibson said that the future is already here. It's just not evenly distributed. With that in mind, can you think of an example of the future being here right now, but most people aren't aware of it?
Well, I think the intersection of technology and all of the things around us, what I call the Internet of Things, is definitely here. We're reaching the point where billions of intelligent devices are connected to communications networks, the internet. And with the advent of AI, now you're going to start seeing more and more autonomous systems take over and become contributors to our daily lives. And Bitcoin is going to play a key role in that as being an underlying settlement network for a lot of those transactions.
Okay, well, kind of brings us nicely to our final two questions. Time to get weird just for a second, Fred. If we zoom out, what do you see as the long-term future for the human race? Do you see dystopia or utopia?
My belief tends to be the kind of, let's call it a conservative optimist, in that we always manage to evolve ourselves out of problems. And so we cause problems, and then we strive to solve those problems, and we evolve. And I think if you go back and you look at all the predictions people have had kind of every century, every couple of decades, what you'll find is people predict a steady state of things happening, at which point there's a disaster. They don't realize that it comes a point where there's enough pain where people change. And every generation is an opportunity for a totally different mindset and perspective to enter into the world. And I think we are continuing to evolve as a race, and we will continue to evolve this planet.
No doubt. All right. Final question, Fred. What is your favorite science fiction book, film, or TV show?
I am a huge fan of Frank Herbert's Dune series. It's by far one of my favorites.
Yeah. Books and the films?
I think the most recent film is the best adaptation of the book series. It's obviously an incredibly difficult piece of material to try and make into film. It's very dense, just by the amount of things a film would have to include in it just to get the story right, are significant. And Villeneuve's movie, and hopefully Dune 2, the second movie in the series, will also live up to the expectation. And there's a rumor about a third movie in the works. That's going to be very dependent on the success of the second movie. So fingers crossed. But yeah, absolutely. Frank Herbert was very prescient in a lot of what he wrote.
Absolutely. All right. A pleasure talking to you today, Fred. Thank you so much for spending some time with us. Just take it out again by telling people, where they can go to follow you on Twitter, the Marathon website, and anything else you want to say on Bitcoin.
You can follow me at FGTHIEL on Twitter, or you can find Marathon at mara.com, mara.com.
Awesome. Thank you so much, Fred. All the best, and bye for now.
Thank you.
All right, there you go. That was Fred from Marathon Digital Holdings. Yeah, the CEO there. And fascinating actually to talk to Fred and get his perspectives on Bitcoin mining, the industry, the halving, ESG narratives. I think it's just one of those interesting times in Bitcoin. Market is as we know, yeah, a little bit unsteady, sideways, not too much happening, apathetic, really, not too much interest in Bitcoin at the moment. And yet, the halving does approach. The spot ETFs, they potentially approach as well. So I think it's very much a waiting game at the moment. We'll see who has conviction on the other side. All right. Well, thank you for listening or watching. This is another episode, folks. Thanks again. Do make sure you're subscribed to the Crypto Conversation in whatever podcast app you are using. But that is it for today. This was the Crypto Conversation for Brave New Coin. See ya.